Today, we're jumping into the world of a financial titan who doesn't just make billion-dollar bets, he picks very public fights to win them. We're talking about Bill Ackman, the founder of Pershing Square. His career, it's just been full of these spectacular wins and some equally spectacular headline-grabbing losses.
And that brings us to the big question, the one everyone seems to be asking. With his focus on long-term value, some people have started calling him the next Warren Buffett. But is he really the heir apparent to the Oracle of Omaha, or is he something else, something completely different? Well, let's dig in and find out. To really get a handle on Ackman, you first have to understand his style. It's unique, and it's aggressive. He is, first and foremost, an activist investor. So what does activist investor even mean? Well, it's not about just passively buying some stock and hoping it goes up. No. This is about aggressively buying a huge chunk of a company and then using that power to force change from the inside. We're talking demanding new leadership, selling off parts of the business, whatever it takes to unlock value and get that stock price moving higher. So how does he actually do it? This isn't just random chaos. There's a very specific playbook he follows almost every single time. His whole strategy really boils down to this four-step process. First, it starts with incredibly deep, almost obsessive research that can sometimes last for years. Then, instead of diversifying like we're all told to do, he makes these massive, concentrated bets on just a handful of companies. He's in it for the long haul, waiting for his ideas to play out. And then, here's the secret sauce. He takes his case public. He uses these detailed presentations and media appearances as a weapon to pressure management into doing what he wants. And listen, when this playbook works, it is an incredibly powerful combination. The guy is brilliant at finding solid but totally undervalued companies. Then, he actually drives real change. Take Canadian Pacific Railway. He got a new CEO in there, totally overhauled the business, and ended up doubling the stock's value. And all the while, he's using the media as a lever to keep that pressure on. But, and this is a big but, that high-stakes style, it cuts both ways. When one of his campaigns fails, it doesn't just fail quietly. It tends to implode very, very publicly. And there is no better example of this than his multi-year war against Herbalife. For Ackman, this wasn't just a trade. It became this deeply personal crusade to expose what he was convinced was a massive fraud. So back in 2012, Ackman makes this colossal $1 billion bet that Herbalife stock would go to zero. He went on TV. He did these hours-long presentations, publicly calling the company a pyramid scheme. He was absolutely convinced it was worthless. But it just didn't work. After this brutal public fight with a rival investor, Carl Icahn, the stock went the other way, and it went up. A lot. Ackman was eventually forced to just give up on the bet, and he reportedly lost pretty much that entire $1 billion. Ouch. And, Herbalife wasn't just a one-off thing. Pershing Square also lost billions on a company called Valiant Pharmaceuticals. He invested a ton of money, he even joined the board, but the company's stock completely collapsed under scrutiny for its crazy drug pricing and some shady accounting. It's just a stark reminder of how risky his whole strategy can be. So after all that, what can the average investor, what can you and I learn from all this? You're probably not going to be launching your own activist campaigns, but Ackman's core philosophy has some really valuable takeaways. You can actually apply these same ideas, go way beyond the headlines, and do your own deep research. That's what gives you the confidence to make concentrated, high-conviction bets instead of just spreading your money thin across 100 stocks. Look for a specific reason, a catalyst, that could unlock a company's true value. And maybe, most important of all, have the patience to think in years, not months. All right, so this brings us all the way back to our big question at the beginning. How does Bill Ackman's aggressive style really stack up against the legend himself, Warren Buffett? When you put them side by side like this, wow, the differences are just so stark. Buffett, he acts like a quiet partner to management teams he already trusts. Ackman is a vocal activist who comes in to force change. Buffett is famously reserved. Ackman is famously confrontational. And this was a huge one. Ackman often uses leverage, that's borrowed money, to make his bets even bigger, a risk that Buffett almost always avoids. It's so interesting because they share the same foundation, right? Deep value research, a long-term horizon, but their methods for getting there are polar opposites. You could say Buffett invests in a company's existing culture, while Ackman wants to tear it down and rebuild it from the outside in. This quote really just nails it, doesn't it? It's probably more accurate to say he's not the next Warren Buffett, but he's the first Bill Ackman. He's a true pioneer of his own unique, confrontational style of investing, which is just fundamentally different from the Buffett model.
And that really leaves us with a final question to think about. What about the future of investing? Is Ackman's confrontational style a necessary tool to hold corporate power accountable and unlock hidden value? Or is it just a high-stakes gamble where the risks will always ultimately outweigh the rewards?